Hi everybody, this is John Park with Coldwell Banker, and in this week's video I wanted to talk a little bit different, this time more towards first-time home buyers, and I've got with me today Jed Wonderly from Noble Home Loans, and we're going to kind of do an interview format and just talk a little bit about what the lender's role in the home buying process is and a little bit more. So thanks for being here, Jed.
Thanks for having me, John. Appreciate it.
So what's your background? How long have you been in the business?
Man, you want to give away my age already, huh? I've been in the mortgage lending business a little over 20 years, and before that I was Series 7 licensed with Fidelity Investments, so I've been in the financial industry for quite a while and did some other financial stuff before then. And so grew up watching my dad chart stocks, and so was always kind of into investing, and so that gave me a strong financial background for being able to, handle people's finances in all sorts of different ways.
Oh, okay, great. So you're a mortgage broker. What's the difference between like a mortgage
banker?
Mortgage banker, I'm sorry. What's the difference between a mortgage banker and a retail bank?
Well, so there are three classifications. There's a retail bank / credit union. I'd lump all of those, together.
So it's like your America First, Wells Fargo.
Exactly,
okay.
Exactly. Zions, University of Utah Credit Union.
Okay.
Go Utes. Had to sneak that in there.
Yeah.
Then there's mortgage banks, and then there's mortgage brokers.
Okay.
So if we go down the list, I kind of like to think of, the retail bank is kind of like, your camera shop.
Okay.
If you want a camera, you go in there, and your selection is whatever that camera store has, and it's whatever their prices are.
Okay.
Mortgage banks are more like Amazon.
Oh, okay.
You go on to Amazon.com, and you look at a camera and it says 28 sellers, are selling this.
Gotcha.
And sometimes when you select on a camera, like for Amazon Prime, Prime isn't always the cheapest,
right?
Because they want to give you that free shipping, but you select on it and it'll say other sellers may have this for a cheaper price. Well, that's kind of how a mortgage bank works.
Okay.
For instance, we sell to about 12 to 15 different lenders, different investors. We bank it on our warehouse line. We have a lot of control that the broker doesn't have. We get a little bit better beneficial pricing because of the volume we do. And so because we sell to so many investors, we typically can get better rates than the regular retail banks. The fact that we aren't paid just for showing up. Most
right.
loan officers at retail banks get, a salary.
Sure.
And so there's a little more, we have a little more invested to try to get that deal done, and there's no easy deal now anymore. There's always some kind of little red flag or a little burp or hiccup that we have to try to find and try to deal with, and we try to find it before the underwriter does, and sometimes if the underwriter finds it, no big deal, we just work through it. All the underwriters that we work with are very good, and they want to make the deal work just like us, so it's a good thing.
Okay.
And then the broker, they're using other people's money, and they don't have as much control, but like the mortgage banks like us, they also have lots of choices, lots of loan programs. So we have, all of your vanilla programs like your FHA, VA, conventional, jumbo loans, all that kind of thing like your retail banks would have. But then we also have a lot of niche product that they wouldn't have, some bank statement programs, some fresh start programs. So people that maybe just had a bankruptcy, we can still do their loan. Might be a little bit bigger down payment, might be higher interest rates and things like that, but at least we have those options.
So the consumer gets more flexibility in that way.
A lot more flexibility.
Okay. So what is the general role of a mortgage officer, and what does a mortgage officer do behind the scenes? I think everybody understands they're going to meet with them and exchange paperwork, but after that, that's just when the work begins.
Well, yeah, there's a lot that goes on behind the scenes, and including a lot of stuff that thankfully I don't have to be involved with, because my main thing is making sure that everything is done according to the time frame, keeping everybody on track. And typically we close early, although with TRID, which is has the new waiting periods and whatnot for disclosures and the way things are handled with those, it's going to be a little longer close. But traditionally, my role is to get all the information up front that's my responsibility, and then the processors do some things that where they get more information behind the scenes.
Yeah.
And then typically what will happen is once they get enough to submit the loan to the underwriter, the 1 to 2 days after it's been submitted, the underwriter, reviews the file and kicks back a conditional approval to us.
Okay.
At that point in time, there might be some things that are a little bit, like, well, I don't know if we can handle, if we can get her that thing, but we can get this.
Mm-hmm.
And so then I start talking to the underwriter about, well, what would you accept in place of such an item, or just kind of negotiating with the underwriters to try to make sure that we can get the deal done. And
right.
Sometimes we have a difference of opinion on how they calculate income, or what assets they're going to use, or various things like that. And so sometimes it's just a matter of communicating properly and painting the right picture for them. And a lot of times I've had that happen where the underwriter says, no, this is the income I'm using, and I'll say, no, but here's why you should use the other one, and I'll change their mind.
All right, cool. So what is the process of getting a loan from pre-approval right down through settlement? What's going on for the consumer during that time?
Well, that's going to vary quite a bit depending on who the consumer is.
Sure, yeah.
It's always going to be a little stressful, so know right up front that, we're going to ask for a lot of things, and, we're going to know about as much as your financial situation as you do. But at the same time, we try to make it as smooth as possible. We want to be very efficient and very thorough. And so really they start by either allowing me to do the application over the phone, which typically takes 15 to 20 minutes, or they can go online. I've got a online application that they can fill out at their convenience. So we do that, and then I ask them to email or fax or get to me in whatever way possible their information, their documentation that's going to document and verify the things that they told me on the application.
Right.
So like your W-2s, your tax returns, your latest pay stubs, bank statements, all that kind of stuff. If they've been divorced, a divorce decree, if they've declared bankruptcy, their bankruptcy papers, things that are going to verify all the stuff that they've given me on the application. From that point in time, I can issue a pre-approval letter. I typically don't until they want to write an offer on a house.
Okay.
So once they go out shopping, and I say, John, hey, these guys are good to go. Go out and find them a house. You do. You say, oh, wow, look at this beautiful house they found. They want to write an offer. I say, how much do they want the offer for? And then I write the pre-approval specific to that offer. We don't, if they want to come in, if it's a $200,000 house and they want to write an offer for $190,000, we don't want to let the sellers know that they're approved for $200,000.
Right. Yeah.
So
strong negotiation tactic.
Yes. So I do that, and then once the offer is accepted, you get me all of the rep fee and any addendums and that there is, and then I take that. We print the disclosures. I have to prepare the disclosures, then we print them out, and then from there, they come into my office, they sign all the disclosures, and that's when we have what the CFPB calls an official loan package.
Okay.
At that point in time, I submit it to my processor. She gets a few other things, like I said, behind the scenes, and then ultimately is able to submit the file to underwriting. Underwriting's typically a couple of days, sometimes slower, sometimes faster, just depending on if there's a refi boom or whatever going
Sure.
on.
Yeah.
So we get it into underwriting, get the approval back. We've also ordered the appraisal during that time. So when we get the underwriting approval back, one of the conditions will be they want an appraisal that'll support the value of the purchase price.
Mm-hmm.
And so from there, once we get the appraisal back and any conditions from the borrower that the underwriter has asked for, plus some documentation from title, like the preliminary title report and stuff, we get all that and we submit that for final approval. We get a final approval, and then from there we order docs. Once we get loan docs under TRID, the borrowers now have 3 days to review the loan docs, make sure they
Right.
understand everything, and then after that, they can sign, and then typically we'll fund either the same day or the next day.
So there's a ton of stuff that's going on while you might be waiting for your home to close and stuff. Lots of people are working on your behalf, trying to get a lot of the things necessary to make the exchange of property legal and compliant, and to give you the best deal along the way too. So pre-approvals is one of the most important things for somebody. I just wondered if you could talk a little bit about what your view as a lender of what the importance of a pre-approval is to somebody.
You bet. Let me before I talk about that though, let me just back up a second, because you mentioned that there's a lot of people working on it, and there is, because there's the listing agent, because we do need, depending on what loan's being done, we do need stuff from the listing agent. There's title, there's my processor, there's the junior processor, there's the underwriter, there's the underwriting assistant, who sets up the package for the underwriter. There's myself, every now and then, we might need to get the owner of our company involved sometimes if it's a tricky deal, and we need to maybe put a little pressure on the underwriter to see it the way we see it.
Sure.
Because we fight for you. That's the one thing that we definitely do.
Absolutely.
It does us no good not to close your loan. So I'm not going to issue an approval for them to go buy a house. I don't want to waste your time. I don't want to waste your time. And so when I issue a pre-approval, I'm very, very confident that they're going to be able to go, buy a house and close on that house. And so the approval, because I verify, a lot of people, especially in the past, would just approve it based on what people told them on their loan application. Right. But because I have an accounting background, and I'm very familiar with tax returns and that kind of thing, and so because of my strong financial background, and because I get all the necessary upfront documentation, I'm always very confident. We pull your credit, we run the file through an automated underwriting system, and we get an approval on that based on the verification that I've done of the income amount and of the asset amount, and what the credit score is and the credit history. Then it's solid. And so that's telling the sellers that, hey, if I accept this offer, I can be sure that my deal is going to close in 45 days or whatever that time frame is.
It shows the seriousness of the buyer.
Yes.
And it also helps you as the buyer know exactly where you're at in the limits. It does you no good to get into a position where you find and fall in love with a house that maybe you can't afford, or fall in love with a house that when you maybe could have found a little bit better one. So it's always nice to know what your buying power is. What do you think some of the biggest misconceptions are that new first-time home buyers have, or people maybe who have not even considered buying a home in the past?
Well, first of all, I think you make a great point. When we do an approval, it's very important. I don't say, so what are you looking at buying? We hope to stay under 200 if they can qualify for 250. I just get that I want to know what their target is, but at the same time, I'm going to let them know what their maximum amount they can be approved for, because then they know. Because sometimes there's a line of demarcation that you step over that line and suddenly, bam, the house has become so much better.
Right.
And so
for sure,
their target might be 200, but it might be that you find something for 210, they can qualify for 250. Everybody has their own threshold of pain, so to speak. But you might find them for something for 210 that's like, oh, we didn't want to go that high, but holy cow, this is so much nicer.
Yeah, it might be worth more than the $10,000 in value to the person.
Right, exactly. So I do that. As far as your direct question about what kind of idiosyncrasies or whatever that first-time home buyers have, oddly enough, one of the things that I run into is, a lot of times they don't know they can qualify.
Yeah, for sure.
It's like, I think they're out there going, man, I'm not a grown up yet. I'm not ready for that next step. How could I possibly qualify?
Yeah.
Even a lot of people that haven't established credit, or don't have a lot of traditional credit. They might have credit, like maybe they've been paying a car insurance bill for a couple of years, a cell phone bill for a couple of years.
Right.
Maybe they've got a gym membership, and they've been paying rent. And they don't have a lot of other traditional credit, more like credit cards and car loans and things like that. And that's okay, because that non-traditional credit can still get them qualified to buy a home. So there's a lot of people out there who could probably qualify to buy. They don't know that they can qualify to buy.
And not just on credit, but also on down payment. You know, when our parents had gone through buying homes back in the 40s, 50s, and 60s, depending on your age, 20% was the norm, but not so much anymore.
That is correct. So today, for instance, one, if you've served in the armed forces or a few other, you know, similar branches of government that allow for VA, no down payments required, and that's a fantastic loan. More to the point that I think John was going towards is with FHA, you can get gifts from family. Mm-hmm. You know, I've done a ton of loans where parents have given their children money for the down payment and or closing costs. You know, typically it's at least for the down payment. So a lot of times, let's say you want to buy a $200,000 house. The down payment requirement for an FHA loan is 3.5%, which is $7,000. Now, it might be that the parents have enough to give them the money for the down payment, mm-hmm. but they don't have enough to give them money for, you know, the closing costs as well.
Right.
On a $200,000 house, typically your closing costs are going to be somewhere between 3 and 4%.
Sure.
So the higher you go, the smaller the percentage. So what happens is we can very easily, on a $200,000 home purchase, bump the rate up a little bit, which won't really make their payment too much more. But assuming it still fits within the debt ratio requirements, mm-hmm. we're able to then pay their closing costs for them. Mm-hmm. So they have their parents, you know, giving them the down payment, us paying for their closing costs, and they're into a home for virtually no money out of their own pocket.
Wow. Cool. Well, any other parting thoughts for them?
You know, there's a lot of people who aren't going to be set up for retirement properly because they haven't, you know, done things that are going to strengthen their financial future. And so what I would say is, you know, when you buy a home, you give yourself stability as opposed to renting a home when you don't know, when you're kind of at the mercy of the owner. Is he going to raise rent? Is he going to get tired of being a landlord and sell it? And then the next person isn't going to want to be a landlord. They want to move into the house. So you give yourself some stability. You give yourself a tax write-off in a lot of cases. You give yourself another way to create wealth. And once you become a first-time home buyer, then at some point in time, as your family grows, you know, you might want to buy a move-up home. And then you have all sorts of opportunities relative to investing in real estate and really putting yourself in a position where you can create a lot of wealth through real estate, in addition to, hey, I'm still putting money into my 401k at work. You know, I've got money invested in mutual funds and things like that. All of those are great things, and diversification is a great thing. Mm-hmm. But there's a lot of stuff that you can do with real estate that makes it really special. And having a good team, like somebody who can, you know, who understands the market, who's going to be on your side, somebody who's going to take care of you, look out for your best interest, is very, very important. And John will do that. And then the other thing is it's important that you get your assets protected. So as you get your first home, you might want to look at setting up a trust. So you need a good estate planning attorney. And especially once you get to a point where you're going to be thinking about investing, buying your next move-up home, and then keeping your current home as possibly your first investment property. Then you also want to look at doing some things like having a CPA so you can maximize your tax deductions. That estate planning attorney is going to really come in handy there because then they can set up an LLC. And I'm getting way ahead of myself, but there's some really, what the point of that is just that it's a really neat way to start just snowballing that wealth that can be
Absolutely.
Made through real estate.
Your home can really be a launch pad to other avenues of being able to create more wealth and more money for yourself, more stability for yourself, and there's just the benefits go on and on. So I'd like to thank Jed Wonderly. He's again with Noble Home Loans for your time today. And I'm going to put his contact information in the comments below. So if you'd like to contact him about getting a loan or getting pre-qualified to find out where you're at in the process, he'd be more than happy to help you. And again, I appreciate you watching my videos. If you have any questions, please feel free to put them in the comments, and you can contact me at www.johnparkhomes.com. Thanks, everybody.
Thank you.